Hello, everyone. Good morning, good afternoon, good evening, whatever time you are watching at. So, today I want to do a trade analysis on Euro JPY using the SMC trading strategy. So, first of all, what is the first step? Identify the market structure. Maybe the market is bullish, bearish, or consolidating. So, as you can see here, let's start from here. The market is is in uptrend momentum right here. This is a break of structure. This is another break of structure to the upside. Then the market created an high, breaking another structure right here. So right here, instead of market coming down to mitigate the other block that is here and create another high, instead the market broke the previous high, which means that the market has changed character to the downside, change of character. So now we're no longer looking for buys. The market has changed character to sell, to downtrend. So after market has changed character, we look for the origin that caused the change of character, where the market started the down momentum from. The last candle, the last this is a downtrend. So our order block in this instance is the last green candle before the sell. This is it right here. Then we stretch it. As you can see, the market has come to tap into the zone that caused the change of character. So that is our POI and order block. We mark out our order block. That is our point of interest. So identify the market structure, which we already did. The market was in an uptrend, then it changed character to the downside, meaning the market is now in a downtrend, no longer in a bullish momentum. So mark out POI order block. This was our POI, the one that caused the downtrend. Then identify imbalance and fair value gap. So in order to be certain that yes, this our order block is a valid order block, we will check if there is an imbalance or fair value gap around this. Yes, this is an imbalance and also a fair value gap rather. This is a fair value gap, FVG. This is our 4 hours order block. We are currently on 4 hour. So our next step is wait for price to react on the point of interest. I think being the market has not reacted, like I don't being we want to take an entry, we wait for price for market to come and react at the 4 hour order blocks. So before we take our entry, we have to switch to a lower time frame. Be it 1 hour, depends on what time frame you take your entry from. So number 5, take aggressive entry or confirmation entry. When price reacted here, it is either you take an aggressive entry or a confirmation entry. Like you are not sure if price is going to break out or it's going to react from before it's going to react from this point of interest. So what do you wait for? You wait for a break of structure, a downward break of structure on the smaller time frame, like for 15 minutes time frame, for example. Yes. So you can see where price reacted. Now on a lower time frame, then this was the break of structure the markets made. So that is a confirmation that yes, we are in a downtrend. That is a confirmation that we are in a downtrend. This was a candle that broke structure. So what do? We mark out our 15 minutes order block in order to position ourselves to enter the trade. This was the 15 minutes order block. Then what did price do? Price came to mitigate the 15 minutes order block. You can see price came to mitigate the 15 minutes order block. Then our stop loss a little bit above the 15 minutes order block in order to give room for spread. So what do we have here? Price came to mitigate it. Let me switch to 1 hour time frame in order for you to see the bigger picture. So let's assume we entered our trade from here. Then we retarget the next point of reversal, which is right here. This one, this candle. So as you can see, what did the market did? We had a 1:16. This was a very, very beautiful trade. 1:16. Can you see that? Now let's go back to 4 hour time frame. Let's look for another entry. This was another break of structure right here. Sorry. This was another break of structure right here. Still on the 4 hour time frame. Let me delete this. So where is the POI that caused this break of structure? Remember, in a downtrend, our order block is the last buying candle before the sell. So remember our step-by-step strategy. Identify the market structure. We already identify that the market is in a downtrend. Then mark out POI or order block. This is the POI. Remember that this previous one has been mitigated, so we focus on the next break of structure. So this is the next break of structure. So this was the origin that caused the break of structure. And what did price do? Like, okay, identify the market structure. We already identified that we're in a downtrend. Mark out POI. This is our POI and order block. Wait for price to react on your POI. Look at price already reacted on the POI. Then take aggressive entry or confirmation entry. If you want to take aggressive entry, you can enter straight off. But if you are not sure if the market is going to go up trending, you wait for the reaction confirmation entry on 1 hour time frame. So if you are entering as an aggressive trader, oh sorry, it's short. Short is sell. So stop loss a little above our POI. Then what do? We target the next point of liquidity, point of reversal. And what did markets did? Market gave us our full take profit. That is 1:5.3. And if you don't want to take an aggressive entry, switch to a lower time frame to wait for confirmation. So after markets reacted on the 4 hour POI, wait for the confirmation that yes, market is in a downtrend. Look at this is the candle that broke. This is the candle that broke the previous low. Confirm that yes, we are really in the downtrend. Then mark out the origin, 15 minutes order block that caused break of structure, which is here. And what the price did. Price came to mitigate it a little bit above the POI. Then target the next point of reversal, which is here. That's the one sweet one ratio. It as you can see, that is a sweet one ratio hit. So you might want to ask that what is the difference between taking an aggressive entry and confirmation entry? Aggressive entry is when you enter a trade as soon as price reaches your area of interest, like entering from here, your area of interest, like the other blocks, supply or demand and demand zone without waiting for further confirmation. Then the advantage is better risk to reward ratio. Like entries are closer to the stop loss level, allowing smaller stop loss and larger potential profits. Then early position, you can see here price reacted from here. Then look at where we enter for confirmation. If you check from here to here, that's a whole lot of pips that the confirmation entry trader has already missed. So in aggressive entry, the advantage is early positioning. It captures the move right from the beginning and maximizing the potential gain. The advantage, it has disadvantage too. Higher risk. Without confirmation, there is a greater chance of the price invalidating the zone and hitting the stop loss. Then again, lower accuracy. The trade rely on the assumption that the zone will hold without clear evidence of rejection. While in confirmation entry, like waiting for additional confirmation, break of structure, look at the break of structure that you wait for confirmation before entering a trade. The advantage is higher accuracy. By waiting for a reaction or confirmation, the likelihood of entering a winning trade improves Right? It gives you the confidence that yes, we are really in a selling market or a buying market. It also reduces false entry. It filters out zones that price might invalidate. Yes. Well, what about disadvantage? Works weeks to reward. Entries are typically farther from the stop loss level, leading to wider stops and reduced potential returns. You can see from year to year, we missed out on a lot of pips. This is more than like 50 pips or almost 70 pips. Then entries are then sometimes we have missed opportunities. Price might move directly in your favor without providing confirmation, resulting in missed entry. Like the price might just move down, giving us break of structure, and might not come to react on 15 minutes order block. Like so, it results in missed entry. So, should you use aggressive or confirmation entries? If you are confident in this zone and you are okay with higher risks and you want better risks to reward, you can use aggressive entry. But if you prefer to use confirmation entries, like if you prefer more accuracy and you are willing to sacrifice some rewards or risk missing trade, then you can go for confirmation entry. So let's go back to our 4 hour time frame. Look at we have another break of structure right here. We had another break of structure. Yeah, so we are going to be waiting next week for price to come. This is a candle that broke structure. Then we'll be waiting here, right here, for price to come back and react. But in this instance, I'll be using confirmation entry because price has done like three break of structure, and I don't know, it might become weak to continue the downtrend. So when it gets here, when price gets here, I'm going to wait for a reaction. Or when price gets to this other block, I'm going to wait for an entry on the 15 minutes time frame, a confirmation entry on the 15 minutes time frame. Yes. Thank you for watching. See you later in my next video. Bye.